given your background, Brian, in other OTC traded markets or just other markets in general, away from VC-backed secondaries, what are you seeing as changing in this market that is making it look a little bit more comfortable to investors that have access to those other markets historically?
Sure. No, I kind of look at just kind of where the flows are. I kind of look at that, within public markets as well. And I think in 2025, there was just a big contraction in terms of the pure, private equity dollars and real estate dollars that came into private markets and alternatives as a whole. And I just, that's more so as a result of kind of where rates were. So, I think given the increase in attention to the late stage VC market, that was kind of one of the lone bright spots in terms of just overall fundraising. So a lot of that money was put to work over the last year. I think you saw the IPO market starting to soften a little bit. I think there's somewhere in the neighborhood of 60 or 70 companies that are set to go or expected to go in 2026. So I would expect the strength, especially in the late stage, VC-backed companies to continue. Anything really levered to all the trends we're seeing in and around AI, even to some degree fintech as well. I'd expect that strength to continue. And to the extent we get the Fed to cut rates here over the next 3 to 6 months, I think you probably see a little bit of a comeback in real estate and real assets to a degree. And so maybe there's a little bit more, competition in terms of where the dollars are going. But, overall, as I kind of, think about the flows and look at, the mega funds that were raised in 2000 or 2020 to 2000, really 23, there's still a lot of dry powder out there that needs to, be put to work. And there's a lot of very, very mature, late stage, private companies that, quite frankly, would have been public 10, 15, 20 years ago at this point. But just given the access to the capital markets, they elect to stay private. And that, I think will allow, that this market to continue to do well here into 2026.
Great. And I know, Billy, you and I were talking in the last week about that comparison between the public and the private. Things like rates are going to impact both markets. But when Brian's talking about I always start to think, okay, what's the pure play AI company that's public? And nothing really comes to mind. So given your background, having a couple decades in the public markets and then moving over to private, I mean, what are you seeing I mean, should everybody follow suit, and start having exposure in private markets? Or, what are the major similarities that actually might play out in 2026?
Well, I think to Brian's point, with these companies staying private longer, a lot of that growth is happening in that 10-year period when they're private. So those more publicly focused funds need to get in the private markets or want to get in the private markets to capture that growth.
Right.
So, and I think as this market, think about it, the private markets is still fairly young in its life cycle compared to public markets. So as it continues to mature and have little changes occur to it that we can talk about endlessly, but I think it's becoming a more investable market for retail and institutional investors. And as that continues to happen, I think we'll see a lot more activity in our market. And it's really just validating to the marketplace overall. And I do believe that, with the liquidity concerns that have been out there since 2021, and again, as Brian mentioned, as we start to see the IPO markets open and liquidity starts to come, that those companies that can take advantage of the public market will. But at the same time, I think we still have a lot of companies growing into their valuations for 21. Could also be the delay for a lot of companies not going public. But as they start to occur, maybe 10 years from now, the window to go to public shrinks back down to 8 years. So again, it's just the appetite of investors. It's different from I mean, I think there's a lot of people who think the public markets are a lot like the private markets, but they're very different. I think they're more cousins than siblings in that way. So, but they're different for their own reasons. And, much like real estate's it's an investable market, but it's not necessarily tradable. You have some assets that have great valuations, but they might be hard to get liquidity. But the private markets, there are great ways to get liquidity in it. I think it's still, a lot of people are still learning that, whether it's retail and institutional, understanding that there's still great ways to get liquidity in this market, more so than they think.